Hello friends, welcome to my channel Fintech Logics with another video. So today we'll talk about the intensifying stress that is coming nowadays, specifically from Q4 2023 in case of unsecured loans. Now I have covered about unsecured loan process in detail with different kind of products. I'll try to give some of the links here. If you have not seen those, please have a look. So without wasting time, let's begin the topic of discussion for today. So recently in Q4, RBI has come up with a warning for or the guidelines for all financial services and banks to monitor their unsecured loans portfolio a little better. So if you see, the unsecured loan portfolio has grown significantly in recent years due to the nature that these are probably little more profitable than the other loans, and they are also performing quite good in recent times. So that is why you would see exposure by each and every banking sector or even non-banking sector, NBFCs as well, has increased. They are investing lot more amount in unsecured loans, and the proportion has gone up significantly from the time before COVID, that means 2020, from 2.5% to on an average of 4.5% to 5% nowadays. Now because of this exposure, it has also brought up a lot of challenges, and that is what RBI has pointed out, doing an analysis across portfolio to be cautious about this. So we are specifically talking about personal loans, unsecured loans of category less than 50,000 rupees, and a major portion of that is consumer durable loans. So that is the segment that is coming under stress at this point of time. Now if you look at the exposure level at this point of time, it is slightly above than 12.20 lakh crore, and yearly growth in this sector is around 25%. So this is not a small sector, and now this signifies that why RBI is so cautious that okay, this can definitely impact the overall lending industry. Now if we look at the loans which are categorized under this, so there is a specific criterion. Now RBI has considered all the loans those are delinquent, non-performing asset, and specifically your days past due, that means the payment is not made after the due for 60 days or more. So these are the loans which are considered for the entire calculation. And if you see 3.62% is the delinquency rate at this point of time, which used to be 1 to 1.8% previously. So this is definitely a thing of concern. Now why RBI has issued mandate to everybody? Because you see, this picture shows the holdings of banks. So every bank is there, right from SBI, ICICI, HDFC to even NBFCs who are there. So everybody has increase their portfolio significantly on this, and they should be cautious. Now there has been mixed reactions from the spokesperson of the banks, that they say in case of HDFC Bank and ICICI Bank that they have taken a calculated risk and their portfolio is still under control. That means they are claiming that this is less than 2.5% of their overall portfolio, but time will say, and I have kept it as TBD. We will discuss that further, that if it is actually a calculated risk taken by bank or this impacts our lending industry. Time will tell us. Now in the meanwhile, RBI has not kept quiet. RBI has issued a set of guidelines. So some of these are doing an intermediate portfolio assessment of your entire portfolio, lending portfolio in this sector. Delinquency reporting to RBI should be increased in terms of frequency, that there will be a lot more times or frequency has to be increased in reporting this delinquency information to RBI, so that RBI can keep updated with the changes on a macro scale. Now, credit appraisal strategy has to be changed. So RBI has advised a few more parameters to be added to tighten the credit appraisal policy. Debt consolidation check. So debt consolidation is a term that probably we'll discuss in another video. So at this point of time, you understand that this is something like a borrower is taking a debt to close another debt or previous debt that he has. So a loan is taken to pay off another loan. So these kind of scenarios are to be monitored with caution as per the guidelines of RBI. And finally, RBI has also advised banks to slow down the rate of consumer durable loan approval. So time will tell where we are in this sector. This is definitely a very good sector, and it has to be monitored in order to maintain efficiency of this lending sector. Thanks a lot for watching my video, viewers. If you like my content, please consider subscribing. Thank you.